Next one is TD Combo. TD Combo has exactly the same blue sequence of 9s, but the difference between combo and sequential is the fact that the count of the red 13s begins at the same point. So in other words, the blues and the reds can sit on top of each other. What this means is that the signal tends to be more aggressive, and in all of the tests that I've done, combo always outperforms sequential. The other thing that I'm very interested in to understand whether I think a trend is actually going to end is go back to the measurement of supports, of overbought and oversold, and so my preferred method of using that is what's called the case peak oscillator. So here's an example where we have a red 13, doesn't really create any reaction at all, and you would have been stopped out. However, when we look at this one, then we are overbought, and the concept of the case peak oscillator is that this is the high, or there is one more high due in this trend cycle. And so when that 13 appears, I have far more confidence that that signal is going to work. The other thing that can happen with combo, because they are overlaid on each other, is the 9 and the 13 can appear on the same bar, and if that happens and we happen to be oversold or overbought, again I have more confidence that the signal is going to work. And here's just another example where the 9 and the 13 are on the same bar and we're overbought as well. And this can then be connected to ideas of support and resistance. And so what I have here, this is the day of that 9 and 13 when we were overbought on a very low time frame chart, and I was at a distribution high for that trend. I know that the first time I hit distribution high or lows, I'm looking for a reaction against that level 70 to 80% of the time. And so if I have Tom Demark signals and overbought and oversold signals at the same time, it gives me the opportunity primarily to increase volume, and that's really one of the main things that I'm interested in. There's certain times when all the ducks line up in a row, and those are the times when you can greatly increase volume because the percentage chance that it's going to work in your favour is that much higher. So let's just have a quick look at some signals, and I've taken this on the foreign exchange market, and the point I'm trying to make is that these can actually be used on very, very low time frames, and within the CQG there's added enhancements now where we can see that we have a blue arrow or a red arrow on top of those 9s. Not all of them, and not always exactly on the 9. And this is where you're getting what is called setup perfection on his studies. Now if I happen to be oversold at that point, I can have more confidence that it's going to work. Remember, this is just a 5-minute chart, so very short-term types of trading. And I can go through, and here I can see where I've had a 13, then I become overbought, and then I have a blue 9. Now one of the important things about the Tom Demark studies is the element of crowd following associated with it. I've taught this method to a variety of banks and hedge funds over the years when Tom Demark studies first came out, and I know that they still use this, and it's much more popular than what it was when I first began. Just to give you an idea, the Bloomberg community has, I think, about 20,000 users on the professional network where they're looking at this. So there is an element of crowd following, and so it's important to me to know when some of those higher time frames, particularly dailies and weeklies, but then also 240-minute charts and half-day charts are producing these levels as well. And as we showed in last week's video, we had a setup on the euro-dollar, and this is just a setup that's occurred on the daily of the pound. So we had a 13 appear here, and then I got one of my divergent signals, which is relatively rare, that then can be used to confirm that 13. Here's one the other way around when we made some highs back in November last year. I had a 9, and then I had one of my green divergent signals, which is a very aggressive one, which is tracking the momentum of that case peak oscillator itself. Just going to the half-day chart, this is on the euro-dollar. We looked at cycle length last week, and the thing here is we had a signal that sort of just created some sideways. We had some recycling in here, and so this original signal didn't really work. However, by the time we got to the lows, then we had been oversold, we'd fulfilled that cycle length, and then we had the reaction after the Greece news. Okay, so very briefly, that's Tom Demark studies. There is a lot more that you can use it for, but I think understanding the principles and getting some idea of when the professional market is looking at these can be very useful for your timing of trades.